You're listening to The Money Hour with your host, Tina Mitchell, and co-host Keelan Harvey on Alternative Talk AM 1150. Now, back to the show with local mortgage experts Tina Mitchell and Keelan Harvey.
Welcome back to the Money Hour at 1150 AM KKNW, the Saturday, March 7th show. I am your host, Tina Mitchell.
And I am your co-host, Keelan Harvey.
You're local mortgage experts. We bring in studio each week the best of the best experts in our local market on everything regarding your money. We're here to help you build a strong financial blueprint. If you're hearing our show at a different time or day, you are listening to a rebroadcast, but we're here to connect you with the guests that we have on the show. Please call the show at 1-855-400-1150. Again, that's 1-855-400-1150 or online at themoneyhour.com. In studio right now, we have Adam Droker, Pandemics and Corrections. Adam, thank you so much for joining us. First time in studio today. Very excited to have you.
Thank you. I'm excited.
Wonderful. And a little bit about Adam. Adam is the financial advisor and chief investment officer at WaterRock Global Asset Management, LLC, based right here in Bellevue, Washington. He is a lifelong resident of Bellevue, having moved from Lake Sammamish to Lake Hills in his life. Adam is married to Allie, and they have 3 children, Evan, Meredith, and Jake. He attended Washington State University, where he completed his BA in business and continued to achieve his MBA. Upon graduating, he started his professional career at Merrill Lynch in Seattle in 2005. In 2007, he joined Morgan Stanley, and on April Fool's Day in 2011, he made the decision to go the independent route and join WaterRock, and that was no April Fool's.
I was going to say, that must have been an interesting announcement. Mm-hmm. Everyone's like, really? Did he?
Yeah.
Really? Is that happening?
Yeah, the branch manager was a little shocked and said, I'm not going to fall for this.
Oh my gosh, that's hilarious.
Yeah.
The grass is never greener from that end of the things, right? But obviously it is, because you're successful and doing well. So with that being said, speaking of pandemics and corrections, we have this uncharted epidemic with the coronavirus here. Everybody's freaking out. I think it's like 50 confirmed in King County, 10 deaths, 18 in Snohomish County. What are we going to do? What should an investor do is the question.
Well, I keep hearing this uncharted, unprecedented, these words thrown out by the media. And frankly, there's nothing that the financial markets haven't seen before. The average investor recovers from a virus type scare in about 4 months. There's data based on recent events like swine flu, SARS, bird flu. They have a relatively short muted effect on the market. So we'll have some volatility, but in the end, we're going to look back on this 10 years from now and say this had a very minor short-term impact. The trick for most is just not to panic, not to get swept up in the media, because they're the announcers on TV, their whole thing is sensationalism, trying to get people to watch. And nobody watches a show when they say nothing that exciting is happening, and we've seen this once before.
Exactly. So true. And you know, it's media sells fear. I like how you say thrown out by the media, because that's exactly what happens. So you need to be really sensitive to what you're drawing in and what you're taking out of media. So Adam, we saw a record decline last week. What effect does that have on retirees and their ability to stay retired?
Well, the big problem that retirees face is they're creating their own bear market before they even invest in the market. They're taking money out of their portfolio, so that's a direct negative return on their portfolio to start with. So when the markets recover, not if, but when, there's a lower dollar amount to recover from. So every year as they pull out their money, they're not participating with the original balance. So that is why I always start with, what are the risks that a retiree face? They face purchasing power risk, also known as inflation, longevity risk, which is potentially outliving their assets. They face sequence of return risks, which is if they had, say, retired in 2007 or late 2006, that the first few years are negative, and it knocks the portfolio down too quickly, too early. So what a retiree should do right now is talk to a financial professional and make sure that they're on the right track still. It's a perfect time to reassess how much risk somebody is taking and whether or not they're taking out too much or too little from their portfolio.
Great advice.
Yeah, I remember in 2008, especially, the worst thing people could do, people freaked out and just started pulling their money out.
Yep.
And not only would they got their money back, but they would have had, we're talking records were getting broken later on. And they would have got, quadruple their money. And some of these people never participated again and, got a sour taste. It was the worst thing they could do. With all this uncertainty, though, Adam, what should investors focus on right now? What would you be telling your people?
Well, I'm telling them plan, reevaluate their risk, and I may be biased here, but talk to your financial advisor. If you don't have one, I'm available.
Yeah, and if you do need to take a look and review, it doesn't mean that you have to change financial advisors, but just getting a second opinion to see what things look like. Call the show at 1-855-400-1150. Again, that's 1-855-400-1150, or go online to themoneyhour.com. We'll definitely get you connected with Adam. So, Adam, let's talk about the market hit of all time higher earlier this year. Is it too late to buy?
Absolutely not.
Never too late.
It's never too late to buy, but it's also you need to really know what your time horizon is and how long you're going to hold it for. So the equity markets may be at an all-time high, but if you're buying an individual stock, we need to delve into a full picture of what that stock is, what their earnings are, and a lot of times this gets right into how do you pick a stock. And I'm going to just say all a stock is a kind of like a timeshare. It's fractional ownership of a company. So when you're buying a company out, so let's say you were going down buying a bowling alley down the street, you're going to want to learn a lot about it. What are their earnings? What's their gross revenue, et cetera? What's your free cash flow? So from there, we decide what stocks to buy. So is it too late to buy? No, if not, it's always a buying opportunity in the market. It just depends on where and what your goals are.
Yeah, and it's the same in the real estate market. Is it a bad time to buy? What's going to happen in the future? People bought homes in 2006 and they're looking really sweet right now as long as they didn't sell their home when the financial meltdown happened. So markets always go up and down. You've got to just make sure that you hold and not get scared and sell at a bad market, just as Keelan said.
My wife and I closed on our house 2 weeks before the market peaked in 2007 and are doing absolutely fine with our house in Lake Hills.
Makes
I'm sure you
so
guys
true.
are killing it. Let's talk a little bit, Adam. I'd love to get your feedback on real estate as a home or as an investment.
Well, I'm going to say when looking at real estate as an investment, it really depends on what your goal with that real estate is. Are you holding land just for the pure appreciation? Are you looking at it from a rental perspective? Are you going to be managing the property? Are you going to be rehabbing and redeveloping the property? If you're buying a rental property now that you're planning on retiring to, maybe you have a place out near water, or maybe somewhere in eastern Washington that you want to live part of the year, or Arizona. It can serve multiple purposes. And that's why I always say when you're looking at real estate, the first question is, how are you going to use it? And one of the things, and when I look for a realtor or a client is looking for a realtor, I always ask them, has the realtor talked to you about how you plan to live in and utilize that home?
Yes. Yeah, really important. I believe in the diversity of your assets, and that's including in real estate and being in the stock market. And I love how you mentioned vacation homes, because you can actually save a lot of money if you have a vacation home, because you're not having to spend all that money traveling other places, and then you've got a legacy to leave to your kids as well. So let's talk about, how do you begin to analyze someone's financial picture, Adam? Break that down for us if you could.
Well, I look at a family or a household the same way I would look at a business. Balance sheet, cash flow statement, income statement. So I begin there. So assets and liabilities make up the balance sheet. At the end of the day, there's owner's equity in a business. On a personal side, it's called net worth. So I start there and I say, how do we optimize that balance sheet? Do we take on strategic amounts of debt? Do we refinance debt? Do we invest in the markets? Do we invest in real estate? What ways can we maximize that balance sheet? Maybe it's investing in their education or re-education so that somebody can find a better job. So that's where I start. Then I look at the cash flow statement. What's coming in the door, what's going out the door, and how do we improve someone's cash position? So right now I'm working with a couple of clients who took out mortgages a little while ago, and I've said, you need to talk to your mortgage professional. You've got PMI, and if somebody's got PMI, now is a great opportunity. They probably have had some appreciation, so there's some equity. You can have a little bit of interest rate improvement potentially, and also re-amortizing the debt over a longer period of time can reduce your cash outflow on a month-by-month basis significantly.
Yeah.
So I always look at the balance sheet and the cash flow statement to figure out how do we move that whole household forward, putting them into a better position.
Great advice.
Adam, that's a huge testament to you, and I hope people picked up on what Adam just said. A lot of people, being from that industry, a lot of people are just concerned about how much money you're going to give me to invest. And you're talking about a lot of things that you're not getting compensated for directly, but that shows that you care about your clients and your customers, and you care about their best interests, and you're looking at the entire picture and making sure that you're coming up with a complete plan for them. So that is the true testament of a fantastic financial advisor. So good on you for that, Adam.
Thank you.
Tax time, that's what we're talking about all over the board right now. People are excited.
Dave's done with ours.
He's done already?
Oh, yeah.
I'm not surprised. Dave's all over it.
I know.
I'm not done with mine. In fact, I think I still have another year I got to figure out a couple of years ago, but it's all good. I'm in good standing. We'll be fine. We'll be fine. But what's the best advice you can give our listeners during tax time where it's on everybody's brain? Are we getting paid or are we paying?
Best thing I can say, file on time, meaning that either file or file an extension. Don't be late. And the biggest thing, and if I didn't say this, my father, who's an accountant, and my grandfather here in the Seattle area, and my grandfather, who used to work as a CPA here in Bellevue for about 60 years, we both I'd never hear the end of it. Know your cost basis. Know what you paid for things. Keep track of that cost basis. That way, when it comes tax time, you're not going to leave a lot of money on the table. I remember I had a client once who came to me. They had received AT&T as a gift many, many, many years ago. It was pre-breakup of the baby into Ma Bell and Baby Bells. And I recreated the entire cost basis based on what the ending share count was. Had they not done that, they were going to owe roughly $18,000 in tax. And by recreating that basis, it saved them a tremendous amount. And I also had a great relationship with their accountant from then on because I took care of the basis stuff that the client didn't remember.
Yes, and I was going to ask a question on a recent client you helped, but we're ending the end of the show, and you just shared that, and that's an awesome share there, Adam. Adam, thank you so much for joining us in studio. We look forward to having you back, hopefully soon.
Thank you.
And this is your host, Tina Mitchell, signing off for the day.
And your co-host, Keelan Harvey.
Thanks for listening to the show. We'll be here same time, same place, right here at 1150 AM KKNW next weekend. Enjoy the rest of your weekend.